Okay, Kevin, welcome back to the show. I really appreciate your time.
Thanks for having me.
Yeah. So, last time we talked, and one of the reasons I really wanted to talk to you is, you're really doing something unique in the emerging markets space. And the other thing is, I don't know when it's going to happen, but at some point, emerging markets is going to have its day in the sun again. Everything in life is cyclical, especially in investing. And when you compare it to U.S. markets, it's emerging markets have trailed, but there's going to be a period, who knows when, but emerging is going to kind of come back and lead for a while. So I think, I thought it last year, and I still think it now. I think there's a really compelling case for what you're doing, and just wanted to get the information out to investors on exactly what that is. So, I'm going to pass it over to you a little bit to talk about generally investing in the emerging markets, and particularly, you mentioned you like to talk about specifically India. So I'll kind of throw it over to you.
Okay,
To
great.
enlighten us.
So let me first just give a high level review of what are emerging markets and why investors should care about emerging markets. Emerging markets are basically they're basically the world. We're talking about most of the world's population, about 90% of the population. And in terms of where are they, like, which countries are emerging markets, 60% of this story is Asia, with China and India each being about a third of emerging markets. And then the other third is spread around Southeast Asia, Latin America, and then all sorts of countries between Africa, the Middle East, and Eastern Europe. So that's what it looks like on the map. Again, fundamentally, this is all about where the people are. Most of the world's people are in emerging markets, and they're younger than developed markets, so their demographics are more favorable. And so you've got a lot more people moving into their peak sort of productive years. And ultimately, when you sort of take the whole emerging market story apart, the thing that's actually emerging are the people. You've got billions of people, and they want stuff. They want the stuff that we take for granted: more food, more and better clothing. They want appliances. They want to be entertained, go to a movie, take a vacation. They want a motorized vehicle, and they want their kids to go to college. And that's the story. I didn't have to figure this out. It's very well documented. So that's what you need to know about emerging markets. And what we do is capture this story, but this story as it combines with two other so-called megatrends. So again, as mentioned, the first part and most important part of emerging markets is billions of people that want the stuff that we take for granted. But what's also happening is that those billions of people are getting their first ever computer. So while I've had a computer for over 30 years now, most people are getting their first computer today. And it's not a desktop computer, and it doesn't have an Apple logo. The Android-based smartphone is getting better and more affordable every year. That is the computer that the world is getting for the first time again today. Millions of people in India right now, every month, getting their first computer. And when they get that, they're getting their first internet connection, something I first got in 1995 on a telephone line in San Francisco. So you're giving billions of new consumers their first computer, their first internet access, and the result has been this incredible story of growth. So all across emerging markets, the same things that have happened here are starting to happen. And for investors, over the long term, that's been very good, but that's not without a lot of volatility. And as you can see, a major decline in the last couple of years, largely due to sentiment going negative on China. And in fact, the reality is, though, that China's been most of the story so far. So if we look at that same revenue that I showed you earlier, this revenue, if we looked at it uh, differently, you can see that China's been 80% of the story. So China, in many ways, has driven the story so far. But what makes the next decade or 20 years exciting is that you have 5.5 billion people outside of China that are also getting their first smartphones and also getting the internet for the first time. And while China's e-commerce market is the most developed in the world, the rest of the planet, including India specifically, is really just getting started. So that's what we do, and that's why today we're super focused on the India opportunity.
Okay, great. Um, and just to jump in there real quick, talking about China, do you think that when you look at it, you see opportunities in China right now, or do you think that they're having some sort of internal, you hear debt issues, and that's going to pretty much keep China down for a little bit longer?
Well, I don't make predictions about the stock market in the near term about any part of the stock market.
Sure.
But I can tell you that sentiment's as bad as I've ever seen around China and Chinese internet companies. And as I'm as an investor, first and foremost, I'm an Omaha Berkshire Hathaway kind of person, and as we say in Omaha, you pay a high price for a cheery consensus. So there's a lot of doom and gloom around China, and the prices reflect that. So I'm not, we're not giving up on the China story or the China internet companies, but it's definitely, it's in a tough time, and it's got, it's suffered from a couple of years of, I think, overblown fears about regulations and delisting and some other threats that people perceived. But now it also has some very real world issues, including a slowdown in their housing market that may, in fact, keep the economy from growing as fast as it might have otherwise. But let's remember, we had a major housing related crash to our economy, and we recovered. And I suspect that even if things go even worse with China's real estate sector, they'll recover and get through. They're smart people, and they actually have a pretty good balance sheet, all things considered.
Okay, great. Well, yeah, let's dig into India then and talk about that.
Well, so India is, as I said before we started, I mean, it really is the perfect emerging market. And again, if you go back to what I, started with, why do you want to invest in the emerging markets to start with? Lots of people, they're young, they have a fast-growing economy or fast-growing economies, and most of that growth is in consumption. And in every one of those categories, India isn't only number one, it's number one ever. So here's a look at the population. So people may not know that about a year ago, 10 months ago, according to the World Bank, India passed China to become the largest population on the planet. And if you look at the go forward years on this chart, it's only going to get bigger and bigger and bigger, while China's population is basically peaked. And so India is not only the biggest country, it's the biggest country ever, and it'll be the biggest country ever again tomorrow and tomorrow and tomorrow. I mean, it's unprecedented in its scale. To put it in perspective, if you left out China, India is bigger than every other emerging market combined. So you have Indonesia, you have Brazil, you've got parts of Africa, Southeast Asia, but all of those different countries and all of the different risks and issues that they face, all of them combined equal India, or even less than India. So in terms of analyzing the situation and the opportunity, you've got so much opportunity packed into one spot, and the opportunity looks really unprecedented because it's not just the biggest population, it's the youngest population. It has the fastest growing economy, major economy in the world. Now, I'll point out that this slide shows the estimates for this year as 6.3%. And the estimates have been 6 to 6.5% for India's growth. But the last 2 quarters, India beat the estimates by 1 full percentage point and grew at over 7%. So biggest, youngest, fastest growing. And where is that growth coming? It's coming from consumption, just like we saw in China as it exploded in terms of its economy. So biggest, youngest, fastest growing. And not only is the consumption booming, it's actually going to be, by most estimates, bigger than China in the not too distant future. So India has all of those things going for it, but it also has some other things going for it that, again, set it apart. I mean, this is really in many ways, and quite literally, this is a once in a lifetime opportunity. There's not going to be another population the size of India's coming into this growth stage, certainly anytime in my lifetime. So all of those things are lined up. And then the other elements that you need and have with India are, first and foremost, India is the largest democracy on the planet. So a lot of the fears around China have been government related and so forth. India, by contrast, is the world's biggest democracy. And it's not only a democracy, but the government is pushing digitization. And they have really unleashed and I think quite brilliantly built a technological platform for the country to leverage and grow on top of, which I'll talk about in a second. So you've got a democracy, and what Modi and his party have done since they've gotten into office 10 years ago, and Modi is the prime minister. Again, he's serving his second 5-year term, which is just ending. He will get a third 5-year term, and he's taken this country with a lot of bureaucracy and a very difficult place to do business. And he's running the country like a business. And he's cutting out all sorts of fat, all sorts of bureaucracy and red tape, making it easier to do business. And he's also, very importantly, investing in the infrastructure. One thing that I saw over the last 20 years was, when I first got into emerging markets, China and India were neck and neck, but China was investing in the world's greatest infrastructure. India, meanwhile, was sitting on their hands. The roads weren't paved. The power didn't work. You had brownouts at the factories. They finally, in the last decade, turned that around and basically doubled all of the infrastructure that they had in the last 10 years. And they're still working off $1.5 trillion comprehensive plan that includes roads, airports, seaports, all the things that India needs to modernize. India also has a tech sector that's basically as old as ours. The Indian tech sector, the outsourcing of U.S. Office processes to India started before I was born, basically in 1968 by Tata, first Tata Computer Systems, and so you have an ecosystem of technologists in India that are unmatched. And in fact, they're not just in India. There are 25 S&P 500 companies that have Indian CEOs. So again, to make all of these economic advances and to develop an economy, you need people. And there's no emerging market or developed market, frankly, other than a couple that have anything like the human capital that India has. And then the final thing is something that I don't think that, I'd be quite surprised if any of your listeners know about this, because I don't think most professional investors know about this. But India has a secret weapon for itself that is something that I didn't fully appreciate even a year ago. Only 9 or 10 months ago did I start to appreciate what India has built for itself, which is basically a digital public infrastructure, a series of technology-based programs that stack on top of each other and provide a foundation for digital growth, which they call the India stack. And this man here, he's really the hero of the story, and he's one of the founders, actually, of Infosys. And what happened, he's also, I should mention, currently the chairman of Infosys. And what happened was, 15 years ago, one of the problems India had in developing was that nobody had identity cards. Nobody could prove who they were. And less than half of the babies even got birth certificates. So as you can imagine, it's hard to modernize an economy when nobody has ID. And they wanted to introduce an ID card system for the country. And they asked this man, Nandan Nilekani, to be the chairman of this program. And he agreed to do this, but he insisted that every one of the identity cards, every person that got an ID card would also be registered in a biometric database with their fingerprints and an eyeball scan, biometric information. So this launched in 2010. It's called Aadhaar, which translates to foundation. And what they've done with it is not only use it to provide a database for everybody, but they used it to allow people to open bank accounts with just their fingerprints. And so you now have essentially the entire population in a digital database. There's a know your customer layer as the second layer that they've used to open 800 million bank accounts. And the mobile phone carriers have used it to open about 500 million new mobile phone subscribers. So you've used this biometric database to not only give everybody an identity card, but allow them to instantly prove who they are and open and bank accounts, get into the financial system, and get into the information age. And they added, after that, a payments layer that allows for real-time instantaneous payments, which now India accounts for about half of the entire world's real-time instant payments. And you've taken an economy that was basically 95% paper-based cash currency 7 years ago, and now it's almost 80% digital. And so India, it really is the perfect emerging market. It's not only has all of those things, the basics, the large population, the young population, the growth of consumption, but it's also got this digital platform, and it's happening at a time when you can now buy a pocket-sized supercomputer for $12 in India. So when China got into this growth phase, nobody on the planet had a smartphone. Now the smartphone is ubiquitous. And so the India story is incredibly compelling. And not only will their economy grow, but the internet economy should grow hundreds and hundreds of percents in the coming decade or two. So that's why I think investors really ought to be interested in India, and in particular, this digital India story.
Okay. Yeah, that's extremely compelling. And so how did you all kind of develop your index for the India internet economy? How do you go about putting together your ETF?
Sure. So, everything we do is pretty simple. So what we want to do is invest in the internet and e-commerce companies that are benefiting from these three megatrends. So the app economy, the FANG stocks, right? The same things we've seen here, right? We want to invest in the Amazon.com of Brazil, and the DoorDash of India, and the Uber of Indonesia. So frankly, this was pretty easy to see when I started our original fund 10 years ago. you could already see that, the trips to the Target store were going down, and all of a sudden I knew the UPS driver on a first name basis. So all of these trends were very clear to me and to most of us, right? Amazon was killing it, and Sears and J.C. Penney were going bankrupt. So it's the same thing, as we've seen in other parts of the world, but just a lot more people in emerging markets. And so our process is first and foremost to identify all of the emerging market companies that are part of the story. And there's some challenges in doing that because, first of all, ultimately every company gets put into a database, right? And the boxes for what you are, it starts with the 11 first level layers of the GICS, the sector level, and then it gets more and more detailed. And so you end up getting put into different sub boxes. So the first thing we do is we look at all of it and figure out where the internet and e-commerce businesses are. And because they may not, there's no bucket at the end that says internet, right? So it's about finding those. And then once we've found them all and vetted, because one of the other problems in the traditional indexes and the databases is that a lot of these companies, in fact, most of these companies, they're founded by the smartest kid in Brazil or the smartest kid in India who goes to Harvard or Stanford or the IIT Bombay or whatever it is, some great school, and then they go to work for Google or Microsoft or Morgan Stanley or Apple. Then they go back and get their MBA at another great school, and then they start these internet companies, and they're getting funded largely by U.S. institutions, and so they end up going public either on the NYSE or the NASDAQ or some other market, and they're getting left out of the indexes. And so we don't care what stock exchange you're on. For example, Mercado Libre, which trades on the NASDAQ with the ticker MELI. This is an absolute juggernaut of a company. This is the Amazon.com of Brazil and all of South America. And it's also the bank, right? Imagine if you went to Amazon.com for your checking account and bought your mutual funds at Amazon or your ETFs at Amazon. That's what Mercado Libre is. And it's, again, an absolute juggernaut. It's not in the Vanguard fund. It's not in the iShares fund. Why? Trades on the NASDAQ. The other problem is that a lot of these companies, they put their headquarters in a certain country, but that's not where the business is. So Southeast Asia, Indonesia, Vietnam, these places, all of the internet companies are headquartered in Singapore, which the database says is a developed market. And so all of the Southeast Asian internet companies, they're not in the Vanguard fund or the iShares fund. So we don't care about what stock exchange you're on. We don't care about what country your mailbox is. We care about where's the actual business. And this is one of the big disconnects in traditional approaches to indexing in emerging markets. So as long as you are an emerging markets internet company, that's the kind of the most work is to find them, make sure that they are what we're looking for. Then it's about minimum size and liquidity. And as long as the companies meet those, we'll include them. And then we rebalance every 6 months and pick up, new IPOs or get rid of things that have shrunk. But usually it's been new IPOs. And in the case of India, the reality is that for the first 7 years of our existence as a business, we had very little Indian exposure because there was only 2 publicly traded internet companies. But finally, they started. The earliest, and all of these businesses are things that your listeners, they may not use these versions, but they use something like it probably. So The travel app of India, Make My Trip, was one of the first companies we owned when we launched, 9.5 years ago. Again, do you want to get a hotel room? You want to get a reservation at a restaurant? You want to need a train ticket? Make My Trip. You want food delivered to you? Zomato is the DoorDash of India. But one thing about the India opportunity that's important, obviously, to make things short and simple, I say things like the Uber of Indonesia or the DoorDash of India. And that gets you 80% of the way there, right? Sometimes maybe 90%, maybe 70%. But the India story, because this whole story is in such an early stage and it's a green fields kind of opportunity, Zomato's not just a play on delivery of food, it's a play on the future of eating food in India. So if you think about, when DoorDash and Uber Eats showed up here in the United States, we had plenty of restaurants, right? We had no shortage of restaurants. If you get off the highway somewhere, you'll probably see, a Burger King and a Taco Bell and hopefully an In-N-Out Burger or a Chick-fil-A or whatever you like. But there's no shortage of restaurants. Again, part of what happens in emerging markets is people don't eat out at restaurants, and then they start to make more money, and then that's one of their first sort of luxury spends. I'm going to go out and eat at a restaurant. And so Zomato, it does deliver food, but its fastest growing business is actually selling food to the restaurants themselves and other restaurant supplies. So again, becoming sort of the operating system almost for the entire restaurant industry development in India. So Zomato, one of the companies we own, and another example, online beauty. Again, you look at the demographics for, how much money does the average person spend on, beauty products or other types of products. So low right now, but all of the demographic numbers indicate this is going to be an exploding area. Nika, which was founded by a woman who was actually an investment banker who promised she would become an entrepreneur by 50, and she did, and now she's one of two self-made Indian women billionaires. Online insurance, again, the demographic numbers, you start going $5, $6, $7, $8, $9,000 a year of disposable income. Insurance, one of the top things on your list. Online gaming, and finally, online payments. So this is, I think, what investors ought to be interested in. I think that people ought to be interested in India. It by all accounts is, as far as I can tell, the best emerging market, and likely. There won't be anything else like it in terms of the size of the opportunity. And I really do think that all the pieces are in place now for it to continue its really incredible growth. There's definitely risks, but
Sure.
But the opportunity looks good. And I think long-term investors who can buy and put it away for 5, 10, 15 years, I think they'll be well rewarded.
Okay. Yeah. It's interesting just to see how you've come about putting this ETF together. And, I agree. I think there's just such an upside here as they become more developed. And just the fact that, like I said at the outset, emerging markets sort of has been left for dead here the past few years, especially China. So there's compelling reason based on valuations, and just that alone should draw people's attention to these areas. So Kevin, if people wanted to learn more about EMQQ and your fund offerings, and where should they go? How can they follow you?
They can find us at emqqglobal.com, and they can also email me or reach out or find me on LinkedIn.
Okay.
So I'm around.
Okay, great. Well, once again, thank you so much for your time. I think, again, this is a really timely topic. And I think like you said, over the next 5, 10, 15 years, it's probably going to be maybe the biggest investing story out there. I would think. I mean, considering how well those sectors that you were talking about have done in the United States, it only makes sense that as these economies really grow and you get more consumers, that those are going to be the areas that do well in emerging markets. Yeah. So,
well, as one of my mentors used to say to me, from your lips to God's ears.
Well, again, thanks for your time, and we'll make sure that people know how to contact you and learn more about EMQQ.
Okay, thanks so much for having me.
Absolutely, Kevin.
Thanks.
Saving Yourself from Wall Street is hosted by Kirk Kinder, Certified Financial Planner. He is the Director of Financial Planning at Bastion Fiduciary, LLC, an independent fee-only financial planning firm. Bastion Fiduciary, LLC is regulated by the SEC in accordance and in compliance with securities laws and regulations. Kirk Kinder and Bastion Fiduciary, LLC does not render or offer to render personalized financial, investing, or tax advice through the Saving Yourself from Wall Street properties. Information provided is for informational purposes only and does not constitute financial, investing, tax, or legal advice.